Hello and welcome to this session in which we evaluate our incident response plan. When the organization establishes a formal IRP and incident response plan, it's important for the company to verify on a regular basis that the plan effectively handles both actual as well as potential cybersecurity threat. So to do so, the company might carry out what's called simulation or tabletop exercises, an annual IRP testing. We can do so through SOC engagement as well, when we look at performance matrices as well as other indicators. So this is what we will look at in this session, reviewing of how a company can evaluate to determine whether their incident response plan is working effectively properly. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, FarhatLectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
Starting with simulation or tabletop exercise, this method involved the response team conducting a simulated event, like a simulation on the CPA exam, where they verbally walk through the steps they would take during an actual cybersecurity threat as if it's happening in real time. Simulation is what? Simulation is actually simulating an event. It's not happening, but you're simulating the event. And this could be done by a discussion-based scenario or more hands-on approach where an attack is simulated by an employee or hired a specialist to observe the response and action. So simply put, you are simulating for example, you could simulate a fire drill. You could simulate an actual attack. You're imagining basically what's happening, or not imagining, like let's assume someone is carrying out these activities, how we would respond under those circumstances, either a discussion or an actual event. This hands-on method is commonly known as penetration test or pen test, where the goal is to identify vulnerabilities. And the purpose of this is to hopefully, what we will do is we find some vulnerability into the system before the actual attackers do. An annual IRP testing. What's an annual IRP testing? On an annual basis, it doesn't have to be annual, but at least annual basis, review what's happening. It's common practice to test the IRP annually through simulation. This ensures that the response procedures are not only current but effective. So this simulation, how often do you want to do it? At least annually. And this insight, as I mentioned, helps you gain crucial information for updating the IRP plan, allowing organization to refine their incident handling procedures based on this real-world exercise. Also, during a SOC 2 engagement, a service auditor may review the IRP plan. So that's another way to determine how the IRP plan is doing. This review includes checking if the plan was tested in the past year. They will kind of double check because they're going to recommend this if it hasn't. Evaluate how the simulated incidents were managed and ensure that the service availability was promptly restored. So they looked at all those three factors to determine how well is our IRP plan. Also, the auditor might examine the plan for updates in response to these tests. Okay, you simulated these events. What did you learn? And did you update your plan to make sure that the organization continuously improve their incidents response capabilities? That's one way. Another way to determine how well your plan is working is to measure performance matrix. When managing an incident response plan, setting clear performance matrix allows an organization to objectively evaluate how well they are handling cybersecurity incidents or simulations. And this matrix provides an insight into the efficiency of the established procedures. So we're going to look at few indicators. One of them is mean time to detect. Mean time to detect measures how quickly an organization can identify an an accident after it occurs, calculated in minutes, hours, or sometimes it could take days. Now you want to detect an attack as early as possible. A lower mean time to detect indicate a faster detection. You want to detect something almost immediately. And why? It's to minimize the impact of the incident. The earlier you can detect something, the better off you are. So if a company detects a phishing attempt within an average of 2 hours from their occurrence, their MTTD time is 2 hours. Now reducing this to 1 hour is better, because if you know it happens earlier, you can send an email to everyone before they open their email, warning them that you might see a phishing email. Be on the lookout. So the earlier, the smaller this average time, the lower, not the smaller, the lower this average time, the better off you are as a company. Then we have mean time to acknowledge, MTTA. This matrix measures the time taken to acknowledge an incident. So kind of now we know for sure we have an incident. Defines as the interval between an incident detection and its acknowledgement. You might detect something, but it may take you some time to verify that this is a real threat. An example would be organization might record the time an alert is received and compare it to when the security team officially started responding, because you might receive an alert. It may take you some time to investigate to determine that this alert is indeed a real threat. If alerts are typically acknowledged within 30 minutes, that will be the MTTA time. So it will take 30 minutes to acknowledge, to check everything. Now you want this to be 10 minutes, you want to be 5 minutes. The earlier you can acknowledge, the sooner you get going, the sooner you will start you activate your defenses. Mean time to contain. Well, also known as the mean time to remediation. This represents the average duration to halt or isolate an incident, preventing further damage. Also, you want to do this as soon as possible. So if a malware infection is usually contained within 4 hours, it means the mean time to contain is 4 hours. Effort to reduce this time will focus on what? Getting there earlier, containing the attack earlier. Effort to reduce this time would focus on faster isolation of the infected system. The sooner we can contain the attack, the better off we are as a company. Now we have the mean time to repair, MTTR. This is the time required to restore normal operation after an incident. How long does it take us to repair? Either to the state before the incident or to an operational level, minimally acceptable level of operation. So after a data breach, if it takes us 24 hours to recover the critical system, well, and resume normal operation, therefore the MTTR is 24 hours. Again, the sooner you can repair and get back to work, the better off we are. Mean time between failures, MTBF. This measures the average time between failures of a system or a component, and we want this average to be as long as possible, with higher suggesting better reliability. So something happened today, and the next time on average it happened is 6 months from now. We hope 2 years from now or 4 years. How long does it take? How long on average does it take before we get a major failure? Well, hopefully we'll have one and doesn't repeat. But if it happens every once in a while, how long? If a network experiences failure, on average 90 days, that's 90 days. What do we want to do? We want to extend this to 180 days. So it happens every 180 days. Increasing this time means enhancing the system stability. Also, we want to take a look at system availability or downtime. Well, the system should be available almost 100%. So this matrix tracks the operational status of systems, focusing on how much time systems are non-functional or partially functional. This goal is to minimize the downtime. So most places, they will guarantee your system 99.99. No one guarantee it 100% because something could happen, but we're saying if it happens, we have the backup, we can get you back online fairly quickly. And that's why they say 99.99, because they have a backup and they will get your system up and running in no time. So if an e-commerce platform is offline for 2 hours in a month and the total operational expectation is 720 hours, well, that's 30 days, which is 30 days times 240. The downtime is 2 hours, 2 out of 720 basically. So it's whatever that ratio, 2 over 720 is the downtime. And the uptime, the system availability is what? Is 718 divided by 720. And let's kind of calculate these ratios to see if this was exactly, you have 2 hours of downtime what does it mean for your system. So if we take 718, it should be very close to 99%, but it's not exactly 9. Let's see, 718 divided by 720, that's 99.72, not 99.99, 99.72. Now if we take -1, it means the system is 0.00277 down percent, which is this ratio here, downtime. You want this number to be higher, the system availability. As this number goes up, this number goes down. You want to bring this down to 0, downtime to 0. So effort to reduce downtime directly impact customer satisfaction and obviously revenue. For example, I want Farhat lectures to be up and running constantly, so if somebody wants to subscribe, they can subscribe. It's always available to you. What is a service level agreement compliance? This assesses whether the agreed upon service performance level, whether it's a quantitatively or qualitatively, and a contract with an IT provider are being met. Usually the provider try to promise 99.99. That's what's in the agreement, but you want to double check that. You want to make sure it's happening. An SLA might require a 99.9 uptime if a service records 99.85 uptime, it's not in compliance, potentially triggering discount or penalties according to the agreement. And that's why you want to have an agreement, because what you do is you're giving incentive to the service provider to keep your system 99.99%. Otherwise, you may get a discount, you may get they may have to pay a penalty for lost revenue. So that's why an agreement is very helpful. Other indicators, there are certain indicators that could highlight deficiencies in an IRP or its handling of a specific incident, revealing both immediate and long-term consequences. What else do we look at? If we see an increase in incidents or severity, well, an increase in the number or severity of cybersecurity incident suggests what? That organizational defenses are ineffective or outdated, indicating that the previous incidents were not sufficiently analyzed or that lessons learned were not used to improve IRP. If the incidence is happening frequently, that's a bad sign. Or this time is more severe. It's infecting more servers, then that's bad. This is what we look at. Extend time to identify or contain an incident. The longer this takes, well, the worse off we are. Delay in detecting or containing incidents highlight weaknesses in the organization, IRP, or cybersecurity position, potentially leading to a more extensive damage or data loss. Other indicators might include more frequent downtime or IT infrastructure damage. Again, you want to do what? Try to eliminate the downtime. Increasing downtime of data centers or damage IT after incidents suggest inadequate response measures, potentially disrupting operation and leading to significant recovery costs. That's also bad. Also, if your cost of fines, legal, and consultancy fees is rising, that's also bad. Over time, you want to learn, improve, reduce all these costs. Higher fees and increased spending on legal and consultancy services after an incident indicate inadequate response measure, reflecting a failure to prevent or minimize the breach. Also, if your reputation is getting hit, that's also bad. A poorly handled cybersecurity incident can severely damage an organization's reputation, affecting customer trust and future business opportunities. So you want all the indicators to be good, not bad. Let's take a look at this multiple choice question from farhatlectures.com. Which matrix would be most informative for evaluating the reliability of an organization IT infrastructure post-incident? So now we're looking at some factors that happens after the incident, some indicator, and it's going to tell us something about the IT infrastructure. Which one of those tells us about the IT reliability, about the IT infrastructure? Okay, is it mean time between failures? Well, mean time between failures is what? It's measured the time that elapsed between failures. So we had a failure today, then the next failure happened 6 months from now, then the other one happened on average 9 months. So this is what it's measuring. Would this tells us something about the reliability of the infrastructure, how evaluating the reliability of the infrastructure post-incident? Yes. If the infrastructure is good, those timeline those averages should do what? Those averages should extend from 6 months, for example, the next time it happened a year, because we learned. Then hopefully if it happens after a year, next time we'll extend it for 2 years. So this is a potentially good answer. Mean time to acknowledge. What is the mean time to acknowledge? To acknowledge an incident. Mean time to acknowledge. This happens as you are under attack. You're acknowledging that you have an incident. First, you detect how long it takes you to detect, and after you detect, you look into it and you acknowledge you're under attack. Let's get going. So both of those don't deal with post-incident, so both of those are out. Cost of fine from the regulatory bodies. That has nothing to do with the reliability of your IT infrastructure. Just cost of fines. Some regulatory bodies charge you more or less, but it has nothing to do with your IT infrastructure. It doesn't tell you anything about the reliability of your IT infrastructure. But if it's taken us longer between failures, and the longer it takes, the better off we are, we say the IT infrastructure is more, we can conclude that the IT infrastructure is more reliable. Therefore, as we expected, A is a good answer choice. What should you do now? You want to go to Farhat lectures, look at additional MCQs, whether you are studying for your CPA exam, information systems and control, accounting courses, finance courses, invest in yourself. Good luck, study hard, and of course, stay safe.